As of May 2026, Bitcoin is trading at around $78,000. To reach $1 million, it would need to increase by roughly 12 to 13 times. That sounds way too far-fetched, right? But if we look back at Bitcoin's 17-year history, that kind of gain is actually not that crazy. At the beginning of 2017, Bitcoin was still under $1,000. By the end of that year, it had reached nearly $20,000, a 20 times increase in just 1 year. By the end of 2018, it dropped back to $3,000, then by the end of 2021, it climbed to $69,000, rising more than 20 times again. And if we count from the beginning of 2017 to its all-time high in October of last year, Bitcoin went from under $1,000 to more than $126,000, meaning it increased by more than 100 times. Every time those numbers happened, people once thought they were impossible, and then they happened anyway. So the question now is no longer, can Bitcoin reach $1 million? It is only a matter of when and based on what. And this is where things get fun. Just try searching for Bitcoin $1 million online. Cathie Wood from ARK says Bitcoin could reach $3.8 million by 2030. Michael Saylor, the guy sitting on hundreds of thousands of Bitcoin, also says $1 million is coming soon. Of course he does. When someone holds that much Bitcoin, who else would say it if not him? Adam Back, one of the most veteran names in the Bitcoin world, said just over a week ago that $500,000 to $1 million could happen within the next 24 months. Meanwhile, jpmorgan, the bank whose boss once called Bitcoin a fraud, is much more modest. They put the ceiling at $170,000, same Bitcoin, same year, 2026, but the numbers are wildly different. So who is right and who is wrong? And more importantly, where are these people getting these numbers from? Is any of them actually right, and is anyone completely off? Let's break down the predictions from each side. Number 1. The institutional money bulls. The first camp is betting on money from major financial institutions. The best known name here is Cathie Wood from ARK Invest, with a target of $3.8 million by 2030. Van Eck is in the same neighborhood, with a target of $2.9 million by 2050. Just hearing those numbers already tells you how ambitious this camp is. But hold on. Where did Cathie Wood get that $3.8 million number from? Did she just stare at a chart and draw a straight line to the moon? Not really. Their logic is actually simple. Around the world, tens of trillions of dollars are sitting in pension funds, investment funds, insurance funds, and national reserves. This is real big money, not the kind of money regular people use to buy a few $100s of Bitcoin on their phones. That money is usually allocated by professional managers into stocks, bonds, gold, and real estate. For a long time, crypto barely had a seat at that table because it was not regulated enough, not trusted enough, and the infrastructure was not ready. But since 2024, things have changed. Spot Bitcoin ETFs were approved in the United States, BlackRock entered the game, regulation became clearer, and the United States even created a strategic Bitcoin reserve. In simple terms, the door has opened. ARK is betting that once the door is open, that giant pool of capital will slowly flow in and push Bitcoin toward the multi-million-dollar range. Think of it this way. Bitcoin used to be like a small lake where mostly crypto people were swimming. Now, someone has dug a canal connecting that lake to the ocean, meaning the traditional financial market. When ocean water flows into a small lake, the water level rises fast. That is the basic logic. And there are already signs supporting this idea. Based on documents I recently read, ETFs have accumulated about 12% of Bitcoin's circulating supply. That is a serious number. It means that out of every 100 Bitcoin floating around, 12 have already been moved into the vaults of large funds. And these funds usually do not flip coins in and out like retail traders. They manage other people's money, so they tend to hold longer. Sounds exciting, but we need to be careful here. First, ARK is not new to shocking predictions. A few years ago, Cathie Wood also predicted Tesla would reach $3,000. As for where Tesla is now, you can check that yourself. That does not mean she's always wrong, but ARK does have a habit of using huge numbers to get attention. And ARK sells ETFs. The more people believe Bitcoin can hit $3.8 million, the more money may flow into her funds and the more management fees ARK can earn. That is not some wild conspiracy, it is just normal marketing. When someone makes a prediction about something they are also selling, you should listen with a little skepticism. Second, the idea that institutional money will come in maybe right in direction, but it says very little about speed. That is the biggest weakness. Institutional money moves slowly. BlackRock does not wake up one morning and decide to buy $1 trillion of Bitcoin just like that. Big funds need committee approval, reports, legal clearance, and trained sales teams. So yes, this money is real. But the time between starting to flow and flowing strongly enough to push Bitcoin to $3.8 million could be much longer than 2030. So if you believe this camp, believe the direction, not necessarily the exact number or timeline. Number 2, the halving scarcity bulls. The second camp is the one I find most interesting, and probably the largest inside the Bitcoin community. This group is betting on scarcity. The biggest representative is Michael Saylor, the chairman of MicroStrategy, who turned his software company into a giant vault holding hundreds of thousands of Bitcoin. In the same camp, you have Samson Mow, Adam Back, and much of the Bitcoin core community. Their usual target is around $1 million, and more importantly, they say it could happen soon. Adam Back recently said $500,000 to $1 million could arrive within 24 months. Saylor, meanwhile, seems to call for $1 million every few months on X, so what makes them so confident? Their logic centers on one number, 21 million. That is the total number of Bitcoin that will ever exist, not one coin more. And in March this year, the 20 millionth Bitcoin was officially mined. That means over the next 100 plus years, the whole world only has 1 million Bitcoin left to mine, while billions of people are paying more attention to it. Every 4 years, Bitcoin has an event called the halving, where the reward for miners is cut in half. Before the 2024 halving, about 900 new Bitcoin entered the market each day. After the halving, that dropped to only 450 Bitcoin per day. The next halving in 2028 will cut it again to 225 Bitcoin per day. Cycle after cycle, new supply keeps shrinking. Here's an easy way to picture it. Imagine Bitcoin as a rare water well, and the whole world has only this one well. Each day, it releases a fixed amount of water, and nobody can force it to release more. Every 4 years, the underground spring naturally weakens by half, but the number of people coming to collect water does not shrink. In fact, it keeps growing. What happens then? The price of each bucket of water should rise. That is the entire scarcity argument. And to be fair, Bitcoin's history supports them. After every previous halving, Bitcoin rose sharply within the next 12 to 18 months. The 2012 halving led to the 2013 rally. The 2016 halving led to the 2017 run toward nearly $20,000. The 2020 halving led to the 2021 peak at $69,000. The 2024 halving came, and in 2025, Bitcoin reached $126,000. It has worked 4 times already, so it is easy to understand why this camp is so confident, but we still need to look closer. First, Saylor holds hundreds of thousands of Bitcoin. Every time Bitcoin rises by $1,000, his company's value increases by billions. So is he truly an objective analyst, or is he a salesman whose fortune is tied to the thing he is selling? The answer is pretty obvious. I am not saying Saylor is wrong, he might be right, but when he says Bitcoin will hit $1 million, that is not pure analysis. It is probably marketing too. Those are not the same thing. Second, the argument that Bitcoin exploded after past halvings, so it will explode again. Sounds logical, but it has one major flaw. Each new halving has a smaller effect on actual supply. In 2012, about 7,200 new Bitcoin were mined each day, and the halving cut that to 3,600. That was a huge drop compared with the circulating supply at the time. Today, the 2024 halving only cut daily supply from 900 to 450. Compared with around 20 million Bitcoin already in the market, that 450 Bitcoin is not nearly as powerful. In other words, each halving becomes less impactful over time, like pouring a cup of water into a swimming pool. Third, and this is the key point, the famous 4-year cycle may already be changing. In previous cycles, Bitcoin was mostly a crypto-native playground. Price moved with crypto sentiment. Now there are ETFs, national reserves, BlackRock, and institutional capital. These players do not follow the halving cycle. They follow macro cycles, Federal Reserve interest rates, and geopolitical risk. So the clean old pattern of halving happens, price explodes, may not work the same way anymore. It could be stretched out, weakened, or replaced by a completely different rhythm. So the scarcity camp is right about the core idea. Bitcoin really is scarce. That is its biggest advantage over the dollar, the Vietnamese dong, or any currency that central banks can print without a hard limit. But going from scarce to $1 million within 24 months is a huge leap, and it depends on many factors this camp cannot control. If you believe this camp, believe the long-term principle. In a world where fiat money can be printed endlessly, an asset with fixed supply should rise over time. That is a strong argument. But as for $1 million by late 2028 or early 2027, treat that more like a salesman's dream than an appointment with your wallet. Number 3. The traditional banking skeptics. While crypto people keep shouting $1 million, $3 million, the traditional banking world on Wall Street sees Bitcoin very differently. The best example is jpmorgan, with a much more modest number, $170,000 as Bitcoin's medium-term ceiling. To Bitcoin believers, that number sounds almost laughably low. But do not laugh too fast. This is not some random influencer on X. jpmorgan is one of the largest banks in the United States, with thousands of professional analysts and a full research team behind its reports. They can be wrong, of course, but they are not just guessing. So, what is their argument? Their approach is very different from the other two camps. They do not see Bitcoin as a monetary revolution, and they do not treat the halving like destiny. They see Bitcoin as a high-risk asset, then compare it with gold. The logic goes like this. Gold's market cap is currently around $33 to $34 trillion. Bitcoin's market cap is about $1.6 trillion, or roughly 4.6% of gold's value. jpmorgan's question is simple. In the best-case scenario, how much of gold's market can Bitcoin realistically take? Their answer is around 8 to 10%, because Bitcoin is much more volatile than gold, so investors remain cautious. Run the math, and Bitcoin comes out around $170,000. That is where the number comes from. That analysis sounds reasonable. But I still do not think it is completely neutral. First, jpmorgan is not exactly unbiased. Its CEO, Jamie Dimon, has called Bitcoin a fraud and a tool for money laundering for years. That view has been repeated publicly in many shareholder meetings. So when the boss has already framed Bitcoin that way, can analysts underneath him comfortably publish a very bullish number? Probably not. In a big corporation, people usually do not go too far against the boss, at least not in public. So $170,000 may reflect their model, but it may also be slightly pulled down to match leadership's taste. Second, traditional banks have a reason not to want Bitcoin to win too big. If Bitcoin truly becomes a global reserve asset standing beside gold or United States Treasury bonds, what happens to big banks? Their roles in holding money, moving money, and lending money all become more threatened. So when jpmorgan gives a conservative forecast, part of it may be objective analysis, and part of it may be what I call wanting to be right. When people analyze something they do not want to happen, they often underestimate it without even realizing it. That is normal psychology, not necessarily a conspiracy. Third, jpmorgan's gold comparison has one hidden assumption. Bitcoin will forever remain a lower grade version of digital gold. If that assumption is true, $170,000 makes sense. But if Bitcoin grows beyond that role, for example as a national reserve asset or a settlement layer for tokenized real-world assets, the model breaks. At that point, Bitcoin is no longer being compared only with gold. It is being compared with something much bigger. And then $170,000 may look tiny, so the bearish camp is partly right. They are right to remind us that Bitcoin is still a high-risk, highly volatile asset. From a traditional finance perspective, it is not mature enough to replace gold yet. That is a sober reminder Bitcoin fans often forget. But they may be wrong in assuming Bitcoin will stay inside the digital gold box forever. Since 2024, we have already seen signs that Bitcoin is stepping outside that box. The United States has created a strategic reserve. Russia has used Bitcoin in international trade. BRICS has discussed digital currencies. These things do not fit neatly into jpmorgan's model. So even if the model is serious, it may be using the wrong measuring stick. So who should ordinary investors like us believe? By now, you can probably see the answer. All three camps have valid points and all three have weak spots. Nobody is holding the absolute truth. So what should someone like me, an ordinary investor with some spare money, do with all these predictions? From my personal experience after nearly 10 years of getting wrecked in this market, the answer is simpler than you might think. Do not blindly trust anyone. Trust your own decision. The key point is this. All three camps, even though they argue about price targets, quietly agree on one thing. Bitcoin is not going to zero. Even the most cautious one, jpmorgan, is still talking about $170,000, which is more than double the current price. That is the market's shared confidence floor now. As for the final number and the exact timeline, let other people argue about that. Will Saylor be right about $1 million before 2028? Let him worry about that. Will ARK reach $3.8 million by 2030? Let them worry about that. Will jpmorgan's $170,000 ceiling hold? Let them worry about that too. You do not live off their predictions. You live with your own decisions, and your decisions should be based on a few simple rules. First, only put into Bitcoin money you can completely lose without damaging your life. Let me say that again clearly. Money you can completely lose. Not food money, not your kids' school money, not your mortgage payment. Crypto is high risk. Accept that from the beginning, and it will hurt less later. Second, buy gradually and hold long term. Do not try to catch the bottom or the top. Even professionals cannot do that consistently, so why should we expect ourselves to? Split your investment into smaller parts and buy a little every month or every quarter. That is called dollar cost averaging. It is not as exciting as going all in, but it helps you avoid buying the top out of fear of missing out, then selling the bottom in panic. Those two traps destroy most new investors. Third, and most importantly, always remember who is giving you the number. Whenever you see some big name on television saying Bitcoin will hit $5 million or $10 million, ask one question right away. What is this person selling? That question alone can filter out most of the market noise. Finally, if you plan to enter this market, I just want to remind you of one thing. Choose a reputable exchange with strong liquidity and a long operating history. Do not get tempted by strange platforms promising high returns or huge bonuses, because in this market, wherever something smells too free or too generous, it usually smells risky too. That is it. Today's video is already long, so I will stop here. If you found it helpful, please hit like and subscribe to support the channel. There are still many other stories in the crypto market that I want to sit down and share with you, and I promise they are the kind of stories you rarely hear. See you in the next video.
Goodbye.